Hey, this is Ali from FX ORDERFLOW channel, and I want to show you guys how I took a trade on S&P 500 today using level 2 data. The trade was taken on CFD, which I'm going to show you at the end of the video, my real account. But the analysis was on futures market. This is futures market, and these candles are 1 minute candles. And the numbers that you see on next to the candles are a sum of buys and sells together. Before we jump to 1 minute, let me show you 1 hour to see what happened. 1 hour. So as you can see, the S&P 500 is really bullish. This is where a few days, this is Monday, and a few days before Monday, Trump bombed Iran, and that's the reason the market opened with a gap. But then we had ceasefire between Iran and Israel, which led the market to go up. And also last week we had Fed FOMC, and the Fed was relatively dovish. And also the CPI data that we had like 2-3 weeks ago was showing that inflation is coming down, even though we have tariffs. So these are all good reasons for S&P 500 to go up. That's why we are really bullish on S&P 500. But as you can see, the market had no correction here up until now. Even today, this is today, June 25, even today market didn't do a good correction. So there is a risk for the market to go down. This green line, as you can see, is weekly VAP, and it's based on volume that was going on through the week from Monday to now. As you can see, the market is really away from the VAP. And when that happens, there is a high chance that we have a correction, or we might range. That seems like we are ranging. The range scenario is happening. So there's another chance that we might range till the VAP comes higher, because the more volume that happens up here, the VAP will move toward the price and volumes. As you can see today, we moved a lot on weekly VAP. So one of these two might happen in most scenarios, and sometimes the market is really bullish and will close with a really huge distance between VAP and the price. So even though I was bullish on S&P 500, if I would want to take a trade on S&P 500, I wanted to have at least a correction to this area. Let me show you. This is value area low. It's based on volume. I'll probably make a video of it later. So if you're not familiar with volume trading and trading based on volume, you might not know what is this. So I was expecting the market, let me make a clean line between these two blue lines. I was expecting the market to come to this area and then reject, but the market didn't come. But it got closer. It got really close. There's a chance that tomorrow we get this low, collect the liquidity down here, and then go up, touch the market, touch the area on tomorrow, Thursday. So I took a sell around here, and my reason was that, as I said, we don't have a correction, and we also have a value area high here, up here, and it's right on the top of the previous day high. So when that happens and we don't have a correction, also the VAP is way far. It was like there when the NYSE was opening. There is a chance that we might not move a lot higher, or we might range, or maybe come down a few pips, like 40-50 pips in this scenario. So I took my chances and took a trend against the trend. I rarely do that, and when I do that, I risk a lot less than I usually do. For example, I usually risk like 1%, but on this trade I risked 0.25, so it's even less than half a percent. So it's much less than what I usually take, because it's against the trend, and usually trades against the trend, they don't go well. So I was waiting for a buy down here, and also I took a sell. I took a sell here and was waiting for a buy, but by the time market came down close to this area, it was too late for a buy. Market was about to close in like 2 hours, and I'm not expecting a lot of movements before closing market closure. So that's why I didn't take the buy, and also we didn't touch the area properly. We just got close to it, but we didn't touch it. We might touch it tomorrow. So let's go to 1 minute candles. This is NYC open, and this is the value area high I talked to you about. It's the orange line up here. So on market open, we had a huge amount of buys that were blocking by a passive seller. The passive seller was keep planting sell limits with really high speed that you can't even detect with eyes, and these are absorptions of buyers. So there was a sign, yeah, the market just opened. These are orders and prices, and also the clock. It's my local time. So we had absorption here, and there was a sign that maybe a passive seller is trying to push the market down, and that's exactly what I was waiting for. But the confirmation is huge amount of sellers and pushing through this volumes of this block. This blue, light blue color that you can see here is a block. It's a buy block. It means that passive sellers were blocking the buys. So as you can see, we had some good amount of sales, but we couldn't push through it. We pushed through it in this candle, but we had absorption of sellers. So it means we also have a passive buyer in the game. So when something like that happens, it's really risky to take a trade, because they might have some huge fights here, and we're taking a trade against the trend. So the best thing to do is to just wait for the market to break this 2 blocks down here, and you can take a trade on the retest. So it's really risky to just enter sells. Even though if we would sell and put a stop loss around here, we wouldn't get a stop that, but we would almost get a stop loss. Like maybe 1-2 pips away from stop loss. You also should consider a spread on CFD market. So yeah, the best thing was to wait, and I waited. We got higher. We pushed this high, 1 minute high, and then we had a lot of absorptions here, and we also had a buy block. It means the passive seller got activated again up here. Then sellers pushed. You could aggressively take a trade here because we had a really huge amount of sell delta. As you can see here, it's the highest number till here. Yeah, you could, if you want, if you're like really sure that you might lose this position and it's a really good area. Yes, we also got a closure below the value area high. That's another reason that you can go. But if you're taking a trade against the trend, I wouldn't recommend doing such aggressive moves. I would just waiting. And I also waited because, as I said, it's a trade against the trend. I'm not like really positive for trades against the trend. I try to be as negative as I can to that trade. If I see any bad signs, I would wait or not take that trade. So we close below this blocks that I told you right here with this candle. As you can see, the delta is really low, minus 621. So yeah, that's enough for me to put a sell limit around here. I put my sell limit here to retest these 2 volumes and also these 2 absorptions. We had 4 absorptions in this area. I was thinking about how much price can go further. There's a chance it will also retest this area here, because we also had good volumes above here. But I usually take the lower one because, yeah, if you go here, yes, you will have lower stop loss, and also you get a better price, but there's a high chance that you just lose the trade, retest here and then lose the trade. So I took it here. We got some drawdowns. My stop loss was, I activated here, and my stop loss was around here. It was around 6 pips, which is really low in S&P 500. And yes, it's really low. You might think that how can you take a trade with 6 pips stop loss? It's like gamble. Yeah, it might seem like that, but we have level 2 data here. We know how much buys and sells is getting executed in futures market. That's exactly why we can take these trades like that. And it's really different from CFD market. In CFD market, if you're seeing volumes, the numbers are fake because it's only in your broker. So you might have different numbers on other brokers. So that's why it's not valid on CFD market. But on futures market, it's not like that. It's centralized on CME, and it doesn't matter which broker you are. Every broker has the same numbers, and the data are from Rhythmic servers, Rhythmic data center servers, and that's why on futures market, the volumes that you're seeing here is completely real, and you can trade based on them. So we had the retest here, we came down a little bit profit and then went up. Trump market tried to do another retest, but couldn't push higher, and then sellers came in when we finally broke this low. Once we broke this low, almost around this area, I closed 50% of my trade on the risk reward ratio as of 1. So when I close 50%, even if we go higher and my stop loss would hit, I wouldn't lose any money, because I closed 50% on 1-to-1 risk reward ratio. So my stop loss and profit was the same. So even if I got hit, I wouldn't lose any money. And basically that's a risk-free trade without moving your stop loss. So the market, we had some ranges here, and then we went up and did another retest here. If I show you guys this area, we took another retest here. So we had 2 retests. One, the second one is here. And then once we took the retest, as you can see, huge amount of sellers came in. And here we had so much sales, but the market was not coming down. I was worried about the trade a little bit here. If it were ranging more, I would get out of the trade with a small profit, but I waited a few more minutes and we finally broke it. And I think around here, I moved my stop loss to break even. And once we pushed this low, we got hit to daily VWAP, a standard deviation of -2, -3, this line. So I moved my stop loss right above this candle. And then when we got here, the spread took me out. Then we pushed lower, but eventually the market came up, and if you would hold your stop loss, you would got hit again on that area. So that was my trade. I closed 50% on 1-to-1 risk reward ratio, and the rest got out of here, but we could get 20. I think the risk reward ratio was around 4 or 5, something between that, if you would hold it and wouldn't move your stop loss, your risk-free trade. The reason that I moved it really aggressively was that I was taking a trade against the trend, and when I take a trade against the trend, as I said, I would be as negative as I can. So I moved my stop loss. Even if I would wait, I was expecting the market to come to this area. This is the buy area that I was talking about. These 3 lines. I would like the market to come at least to this second line here. And even if I wouldn't trade my stop loss, the market came up again. So even if I wouldn't move my stop loss over there, once we came here, I would definitely move it, and I would get out in the same spot, definitely. So yeah, the result would not change. This was my trade on S&P 500 for today. And this is the CFD market. As you can see here, I took the trade on the retest, and this should be this candle. Should be the NYC open. Then, as I said, once we broke it, the blocks were here. I took the trade on the retest here. We got some drawdown. This is the second retest that I talked to you about. I closed 50% on this low, on 1-to-1 risk reward ratio, and the rest I trailed it here. Then I trailed it here, sorry, above this candle. But once we came here, the market came here, the spread got me out. So as you can see, it got me out and then straight down. But it was a spread's fault. I should have just put it a little bit higher. But honestly, it doesn't matter. To me, once we break this low, we shouldn't come high here. The deviation was down here. It was too risky to hold it. And as I said, the trade was against the trend. And also the market was ranging really bad on lower time frames, as you can see, and this is also a bad sign that we might range. If you range on higher time frames, if you go to lower time frames, we are also ranging there. So this is not a good sign. And yeah, that's my trade. If the content was useful to you, like and subscribe. See you on the next video.